Folks, I also want to just talk real quickly with you all about why cryptocurrency, all right? And there's really five main cornerstones that I want to talk about as far as why cryptocurrency and the things you need to be prepared for, okay? So number one, you need to understand what you're investing in. So when you think about Bitcoin is different than Ethereum, which is Ethereum is different than Litecoin, which is Litecoin is different than Dogecoin, which is different than Solana or Polygon, or there's so many different cryptocurrencies. And there's also these what we call blue chips that most of the ones I've just mentioned that are very sophisticated projects that have been around for quite some time. Just understand the past is the past, okay? That's another point here that I wanted to make with you. You know, sometimes along your investing journey, you may make a mistake. You may over leverage yourself and things like that. But just understand that is part of the learning process. And unfortunately, every single decision of investing in cryptocurrency isn't going to be a perfect one. But the thing you need to do is just ensure you're learning along the way, okay? And getting better and more savvy as an investor of cryptocurrency. The third thing I want to just also talk about is volatility, all right? In the stock market and things like that, there's certainly volatility there. But what you'll find is if you've historically just invested in stocks and bonds and things like that, you're going to find that cryptocurrency can be an extremely volatile landscape when it comes to investing in cryptocurrency. So I just want to make sure that you're very careful about when you're getting into cryptocurrency, understand there's high risk, but there's also very, very high rewards, okay? So just keep that in mind as you're getting into the space. That kind of lends me into my fourth point, which is you want to make sure you're managing your risk tolerance, okay? So what do I mean by managing your risk tolerance? It's, when you're trading, think of this in a long-term basis, okay? Because if you're thinking about it in the short term, you might slip a little bit when it comes to the volatility, right? And I don't want anybody, especially viewers of my channel, ever get in a situation where they're in dire need of having to sell because they need the money, right? When you're investing in cryptocurrency, there's really two main things you want to make sure you avoid. If you're going to play with leverage and you're going to borrow, you better do it responsibly. Otherwise, more times than not, you're going to get burnt. Okay. So you want to be very careful there. Don't over lever yourself. And second of all, when you're making investments, make sure you're doing it in amounts of money that you can be willing to afford to lose. Now, what do I mean by willing to afford to lose? Meaning it's okay if it goes to zero. You're not going to miss your mortgage payment. You're not going to miss your rent payment. This is the important keys, because what that'll allow you to do as an investor is ride out the turbulent waves and then eventually make it on its way to when you need the money. It's well into the future, and hopefully at that point, your investment has risen in value over time. Giving it time is what's key and critical here, okay? So these really are the five pieces that I wanted to talk about. And again, in summary, once again, understanding what you're investing in, do your research, make sure you're looking at these cryptocurrencies, understanding how they work, right? Remembering the past is the past, invest in it, but also learn as you go as you're investing, okay? Understand that you might make mistakes along the way, and that's fine. And number three, make sure you watch for volatility, okay? The cryptocurrency market is extremely volatile, and it could be good volatility, it could be bad volatility, but it's volatility nonetheless. So please be safe and careful about that and understand that as part of cryptocurrency. Fourth thing is to make sure you're managing your risk profile. Don't over lever yourself. Don't put yourself in a position where your risk is too high and you get into an uncomfortable situation where you need to sell. That is going to be a bad strategy overall, okay? And finally, last but not least, number five is to make sure you don't invest more than you can afford to lose, meaning don't be putting your mortgage payments in cryptocurrency. Don't be putting your rent payment in cryptocurrency. Don't put that in any investments for that matter. You need to make sure you have a nest egg of savings you can easily dip in and out of outside of investing into, especially things that are very risky, okay? But as is with everything that's high risk, there is high rewards to be made. And that is why I feel like in your portfolio, you should always have some kind of cryptocurrency in there. I'm not going to tell you how much because that's a decision you need to make as an investor about how much cryptocurrency you want and your risk tolerance. But I think everybody needs to have some of it in their risk and their investments. And that's why at this channel, we talk about cryptocurrency. We're all about educating people about what it's all about and allowing you to make your own decisions for your own investments of what is right for you. All right, well, that's what I had today on this introduction of cryptocurrency. This channel is going to now have a playlist that's going to go into some of the basics, and I hope that you find this really helpful as you go along your cryptocurrency journey. All right, well, that's all we had today. PJ Crypto signing off, and I'll see you on the moon.